Well, hello, crypto trades and trade talk, conquering the markets communities. Welcome back. I hope you all had a good bull market. We're back to talk about what's happening in Bitcoin. There's a lot of significant developments. I haven't made a video for a couple of years, and I think it's time that we start discussing the opportunity in front of us. A lot of people are going to be scared by the updates I have today. But there's going to be huge opportunity, and I really want to help try the collective communities between us all to navigate to the right place here. As you see here, I've got pulled up a modified 4-year cycle chart. I continue to see many posts saying the 4-year cycle is dead, and most people are fading the 4-year cycle. And I get it. The effects of the halving should diminish over time, especially as we have diminishing returns in price. And that is certainly true. There is a demand part of the cycle as well, though. And do you know that the broad markets, this S&P 500, for example, also goes through 4-year cycles? So it's actually not that unique that Bitcoin has a 4-year cycle. What's unique about it is the starkness in which it is undergoing its 4-year cycle. But you see I have depicted here, if we start the 4-year cycle when BlackRock actually filed its ETF, which signaled to the market that there was going to be a Bitcoin ETF because BlackRock doesn't fail, and that ETF event plus the halving was like a double event for this cycle, and that makes it kind of double disappointing that we had such a lower high. But you see here, I've got depicted that it still was basically from the bottom to the top. I think it was about 700% return from the $15,000 bottom to the $126,000 top, but it was 370% roughly from the BlackRock ETF filing till the peak a few months ago. So I still think the 4-year cycle is actually alive and well, and what I want to highlight is several reasons for the Bitcoin sell-off to happen now. Not just the 4-year cycle, I do think is a part of it. I do think the halvings will continue to actually have some implications, especially if price stays at these levels, although I think price may fall off. But looking back, the halvings do matter, because when the halvings occurred, if you look here, Bitcoin was at $10,000 when the halving occurred in 2020. It was at $600 when the halving occurred in 2016. It was at $74,000 when the halving occurred. So the volume-weighted adjustment, the actual dollar flows associated with, there was a lot less U.S. dollar value. So when that got cut in half, the fact that the halving was larger but the dollars were less, it was a smaller actual U.S. dollar total flow a change in 2016. It was smaller in 2020 versus 2024, for example. So the fact that the price has continued to go up the halving does still have a significant impact. I do want to highlight, but the reason if you see my prior post here, Nazi asked if I was acting on this thesis, and I said yes. At that time, back in September, I said I started closing all my trades and taking profits, which I've taken a lot of profits, and I'm hedged now through the end of the year until the beginning of next year to close out a bunch more positions. But yes, I did take profit when that trend line that you see here broke down. I was aggressively exiting the market at that point. I highlighted it here multiple times in multiple posts on X. The reason wasn't just because of 4-year cycle timing that I had lined up. It was because technical indicators. Basically, we saw a similar double topping pattern, but it really was this just general loss of the 50-day moving average. Well, the 50-day moving average has detached significantly from the 200, and when the 200-day moving average has been in a very long uptrend, when you lose that price, it's usually a good place to start looking to take some profits and then buy the dip. Now, this can result in a massive dip, as it did in the 2022 bear market, or it can be smaller dips, like it did back in early 2024. But the reasons I exited were very technical. I wanted to highlight that. It wasn't just that there was a 4-year cycle. It wasn't the market was telling us. It was also into exhaustion. Now, something you probably all noticed, I've renamed my channel. I had Grok make me a quick image here. Moving forward, because of the state of the Bitcoin market, there's going to be so many other things that we need to discuss. And I do think, just to warn everybody, Bitcoin is heading into a 6-year bear market. I'm going to talk about that. So I think we're going to have a prolonged bear market. I do think the 4-year cycle is probably going to break, but not the way people think. I think it's probably going to break to the downside. But all that said, I had Grok put together an image for me here. I'm a maximal truth-seeking individual. What's funny is I called myself a truth seeker long before Elon talked about Grok being maximally truth-seeking AI. But because Grok is the truth-seeking AI supposedly, well, I had Grok make me a little image here for the page, the channel moving forward. It's a little bit of a homage to the Bitcoin. We're going to still trade Bitcoin as our primary asset probably moving forward. I do want to highlight, again, people keep saying the death of the 4-year cycle, but it looks very alive and well to me. So that's something to keep in mind. We may have a low right on time at the end of 2026. That may be a tradable low. I do want to highlight that I personally think that we may not actually get a new all-time high in 2029. It may be a lower high. I have a lot of reasons for that. You see here the most viral post, I think, for me of the year was when I put out this simple chart. This shows the release of a software called Bitcoin Core version 30. And I said I believed it was the primary reason for the sell-off. Well, I think there are 3 reasons for Bitcoin having sold off this year, since October basically. I think first of all, it is global liquidity. I'm going to show you a clip from Michael Howell in a little bit that talks about his thoughts on global liquidity. When it comes to analyzing macro markets, I think that is the primary aspect that everybody needs to be looking at when it comes to macro markets. I think it's like if you want pure signal and no noise, study global liquidity. And all liquidity is, I want to highlight this, it is the banking system's willingness to lend at favorable interest rates. That's all it is. And as risk increases in the system, as bad debts, so the banks, they lend and lend and lend, right? That's their job to lend. Over time, they're going to discover that some of their loans may be not as good as they thought, and there may be some bad loans on their books that they're starting to be prepared to write off. That really constricts how much they're willing to lend in the future because they got bad loans to write off, and they start becoming very picky about who they'll lend to, and they start increasing the spread on the interest rates because of the risk in the system. They see a lot of risk. So all liquidity is the ability of banks to lend at favorable rates. And when you have that, when you have that situation for many, many years when banks are willing to lend, when there's a lot of underlying liquidity, a lot of fresh US dollars coming into the system, which really props up their balance sheets and frees up their ability to lend, they're inevitably going to make bad loans. And when they do, what happens is it constricts their ability to continue to lend out and refinance debt. And that's what ultimately the market is all about, is debt refinancing. As you see here, I reposted Jack Mahler's, he says the common narrative that, Bitcoin's sensitive to liquidity. He highlights, though, that it moves first, and yields are puking, spreads are blowing out, banks are stressed, therefore Bitcoin is selling off. And this is all true. However, I think the common narrative that people keep latching onto is when they're forced to print, it'll move and it'll outperform everything else. I agree in general that when they're forced to print, assets, especially hard assets like Bitcoin, should do very, very well. However, the question is when are they going to be forced to print? And I really want to talk about a couple of things. So we've talked about Bitcoin Core V30. We're going to talk more about that as we go on in the series here. Liquidity is drying up, but when is it that they're actually forced to print? I just want to make a quick statement. It is not immediately. It's not going to, they're not printing right now in large amounts. They're doing some small operations to help free up liquidity in the treasury markets, the Fed is, but it is not mass printing. The mass printing in QE is actually not effective until interest rates are near zero. They have to be far under real inflation. When interest rates are close to or at zero, then QE is very effective and they'll engage in it. But so they have a long way to go to get interest rates to zero and be ready to actually start the printer up again. And it usually occurs on the other end of asset price sell-offs. And what I see developing, what I think is clearly developing, is a large liquidity correction headed for next year. There's way too many bad debts in the system, way too many bad loans. AI leading the way, and loans that are not going to be able to be repaid or serviced in the immediate future. And so that liquidity is going to dry up. And then the ability of institutions, individuals, sovereigns to roll their debt is going to be constrained. And when that happens, people are forced to sell assets to service their debts. So we're going to have to go through that period first. So I think there's problems with Bitcoin Core V30. There's a solution in BIP-110 that we need to talk about that I think is our biggest opportunity in Bitcoin. But I do also want to highlight MicroStrategy, the large treasury companies. If Bitcoin goes into a prolonged correction, given the move of strategy from just basic share issuance to these preferreds, there is going to be a lot of pressure on MicroStrategy to sell Bitcoin instead of issuing MicroStrategy to service the dividends down the road. And I know Strategy has said that they have raised $1.4 billion, I believe, to pay the dividends. What I believe you're going to see probably happen is that as MicroStrategy moves to a negative MNAV, which I'm pretty sure it will, they're going to start to use that cash that they conserved to pay those dividends, and maybe even to do some like share buybacks to try to make the shareholders happy, because there are going to be a lot of very underwater shareholders. As that cash dries up, they are going to start to have to issue more strategy to pay the preferred dividends, especially if we enter a 6-year bear market like I'm thinking we very well might. Imagine for 6 years if MicroStrategy is underwater on their Bitcoin position for 6 full years. That cash position is going to dry up really fast. They're probably going to blow it on a purchasing Bitcoin and or repurchasing strategy stock or something long before the 6-year bear market's over. And then there's going to be immense pressure for them to start selling their Bitcoin when they're negative to support the share price at a negative MNAV. And they'll be selling that Bitcoin. They'll be a forced seller at under their purchase value. So I do think personally, I think strategy is in a world of trouble coming up here. So to recap, I think the big drivers of this sell-off are actually first and foremost probably the issues with Bitcoin Core V30, and really that it's not necessarily just the software release itself. What it is the signal that the community as a whole is split on whether this is good or bad for Bitcoin, but enough of the community seems to be passive about it or supportive almost of it to such a degree that it's really a bad signal for a lot of these cypherpunk OGs who have been in the space for a very long time. They understand that Bitcoin is ultimately a social experiment, and if people do not support the proper ethos, namely Bitcoin needs to be purely a monetary network, a very simple, robust, and secure monetary network. It has to stay decentralized. These changes that are being made are making it not as decentralized, right? So you take Bitcoin Core V30, global liquidity drying up, and the 4-year cycle dynamics. I believe those are the 3 main drivers behind this sell-off. Now, we have some hope. Looking forward, I do want to talk about the positive aspects. And we're going to talk about that after a brief break. I do have some incentive to do these videos once again. I've never sold anything. I've never sold trading courses, never sold access to my Discord or anything else like that. But I personally have been diversifying from my Bitcoin and stock-related holdings into real estate. So I started a property company this year, and I've made my first purchase late this year. So with some of the Bitcoin that I sold, one of the things I wanted to do when I sold my Bitcoin was to get into equally scarce assets on the other side. And while beachfront property is about as scarce as you can get, so and also given the favorable tax laws around short-term rentals versus commercial property, my first investment is this beach house that you're looking at here. So I've personally purchased in the name of my real estate company, 1891 Properties, and I'll talk more about what 1891 means here in a little bit. But 1891 Properties, our first property is Crystal Tides in Crystal Beach, Texas. I'll put a link to the booking page here in the description below. If you are in the Houston, or Texas, greater Texas area, Louisiana, and you want to come stay at our property, it would help the channel, help me out tremendously to fill this property up and keep it full. As you can see, it's a beautiful 5-bedroom, sleeps about 20 people house with a hot tub built on a deck right on the beach. You're not going to get any closer to the beach. What's great about it is you can sit in the hot tub. It's actually a swim spa, so you can actually swim. It's pretty deep on one side, and it's got the jets, so you can swim against the current. But you can be sitting in that hot tub with a group of people watching the kids play on the beach safely. Or watching the fishing poles. That's what I like to do, put the fishing poles out front there, and you can keep an eye on your fishing poles from the hot tub. It's awesome. All right, enough for the advertisement there. So getting back to Bitcoin and the opportunity we have here, you can see here, technically speaking, Bitcoin is breaking down. There's been multiple areas of breakdown. I don't understand why more people have not been, following this as I have. I think a lot of people are missing a lot of important signal here. But if you just look at the prior market structure, very similar, double top structure. And when these more parabolic lines, you see here, it's a very similar structure. But you have this overall, these 49K lows. This was driven by the Japan carry trade unwind that happened in 2024, and then the tariff tantrum. And when that trend line got violated here to the downside, that's to me the ultimate signal that we were heading into a bear market. And then now we've formed a bearish pennant and broken down from now. All very, very bad technical for Bitcoin's price action. And I believe this is, again, there's global liquidity is drying up. I believe the markets at large are about to turn over. I do believe that Bitcoin is a leading indicator of liquidity. So that's at this stage, at this point right now, that may be the primary driver of the continued breakdown. I do think one thing I want to highlight is I do think this top right here, if you look at this trend line that we drew from, I wasn't watching this trend line until a certain event occurred, but the 2017 top through the 2021 top, right here when price moved right up in July into that trend line, there was news of a massive OG whale moving his coins. It was about $8 billion of coins. You probably saw the news, and selling. And he said it was for estate planning reasons that he sold into this. But I believe likely, as I've heard from other Bitcoin OGs, that it was selling because they are there's many reasons. But the original OG cypherpunks are now moving on to other things and diversifying, because fundamentally the ethos for which they got involved in Bitcoin, they believe that it's lost, right? So between it's not so much the nation state involvement and the ETFs and things like that, the sovereign, that stuff is inevitable. I believe they're more concerned about how the broader community and individuals have embraced that. And like if you look at, for example, this last 2021 was very much driven by NFTs and other craze. 2017 was a large ICO and altcoin craze. This time it was treasury companies, Bitcoin treasury companies. And if you look at the ethos of individuals buying treasury companies as an amplification to the Bitcoin trade, it's very much obviously a fiat-minded thought process. And so that does seem to indicate there is a lot of unhealthy involvement in the Bitcoin space. When you add Bitcoin Core version 30, the changes that they've made there that seem to be somewhat supported by the community, and just if anybody doesn't know, Bitcoin Core version 30 changed the op return from 80 bytes to 100 to 10,000 kilobytes. That allows a large amount of data to be sent around the network. Now, yes, you'll hear arguments. Technically, consensus rules have always allowed even the entire block, a full block, to be filled up with op return, a single op return. And it was being filtered in what's called mempool policy. So that's what the transactions that are being relayed around the network by full nodes is mempool policy. That controls that. Now, miners pull from the mempool, and they build their block templates based on what's available in full nodes and mempools. And they build a block template, and they try to find a block with transactions sitting in that mempool. So if certain types of data isn't being circulated freely around the network, it's generally not going to be mined for the most part. Now, there are services like Slipstream where people could, and for a while there, these large miners allowed people to directly submit large op return data to be mined by their service at a premium. But the thing about that process is that it's not anonymous. Like when you submit something, they have the ability to censor those images going into that. Now with Bitcoin Core v30, we can individuals can relay whatever they want, those large images or large files, whatever it is, around the network freely, and node operators who are running Bitcoin core version 30 or later, are going to relay those large data files around the network, and then it can be found by any miner. And this allows an anonymous upload of potentially illegal content, but also it just fills up the chain with spam, and it's just not core to the Bitcoin monetary revolution ethos, which is the cause for concern amongst the OGs, which is why they are selling in mass right now. But also, that also does affect buying. So while not everybody is clued in, I know a lot of people argue that most people are ignoring this, and that's probably true. But while most people may be ignoring this, the people who are paying attention that would have been buying here may not be buying, myself included, right? We're not looking to purchase to add any more to our positions. We're diversifying our positions. But so as price goes down, price is being driven down, there's less buyers, more sellers, and then how does that affect the common observer of the network? Well, when Bitcoin's price is trending down, people tend to check out and institutions tend to check out, and this is largely what I think is occurring here. So this is probably going to continue. Now it's going to accelerate when we have the upcoming soft fork. And now that we're at minute 21 of this video, I want to talk about the opportunity moving forward. I don't want to try to give, a lot of people are going to ask me what do I do with my Bitcoin now. That's going to be for you to decide. Generally speaking, I do believe that there probably will be a bounce. Technically speaking, let me just cover this real fast. There's a good chance we liquidate these lows, something like this. But the problem is, and get a bounce up to a lower high. The problem is, like you see here, this descending structure, we liquidated the lows multiple times. 1, 2, 3 over here, liquidated the lows multiple times. So these descending structures give you the ability to bounce out of there. This is a descending structure, so a very clean one here. You saw it back over here, very similar descending structure, and then that allowed price to be built up to the upside that could quickly be liquidated. So right here, all of that price, all those lower highs built up liquidity. That's why price moved against the market so quickly. It liquidated all that all at once. Same over here, lots of lower highs, and it quickly liquidated these highs over here. Once it broke above these highs, quickly liquidated all that. Same here, lower descending, quickly liquidated all that. Now what's happening is the opposite, right? The problem with this formation is you had liquidity building up the other way. You were taking out liquidity on these stops of all these highs and building up liquidity, so now we're going to have a very quick, powerful move to the downside. That said, we could still bounce from here on the liquidation of that to a lower high. I believe probably early next year. We might bottom out in the high 70s even. Don't the squiggle's not gospel per se, but just the concept here is that we could liquidate, we could bounce, and so if you are still holding more than you want to be holding, I'm still holding quite a bit. I'm hedged for a good portion, but I'm not hedged for my entire long position, so I am looking for the same bounce. But you could look for a bounce to 97, 98,000, or even I believe I've got flagged 107 right there, that liquidation of that high. Okay, I paused the video to clear my throat. I kept talking for probably 5 minutes here, and I have no idea where I was at. But let me just summarize what I think roughly where I left off. For those of you still holding Bitcoin, and you're looking to take some profits, you didn't take as much profits as you'd like up here. Likely, the path is going to be a liquidation of these lows, but because of the severity of the breakdown, these are all breakdowns. This is an ascending bearish structure. That's not a good bullish structure. Like this is a descending bullish structure. So the breakout here gave us enough juice to get to all-time highs. This breakdown is likely going to punch down quite hard with these liquidations. But then it might bounce early next year. So I'm going to say my base case, I don't really like having base cases. A probable path is something like a quick breakdown here to the high 70s, liquidate those lows, and then a bounce all the way back up to the level that we broke down out of this major structure at, right around 107. And the 200-day moving average should trend. So right there, when there's an intersection of a major level like this breakdown level and the 200-day moving average is likely the peak of the counter trend bounce of the bear market that we can all look to potentially take a little more profit into. So that's a thought on that piece. Now, I was talking about what is the major opportunity. We're at 24 minutes into this video now. So give your friends and family from this point forward if they want to know what the really big opportunity is. Starting at minute 25, I'm going to start talking about what is the major opportunity moving forward in Bitcoin. If you didn't sell enough at this top, if you're really frustrated, hopefully you're holding your coins in a cold wallet. If you are holding your coins in a cold storage wallet, I am personally. All of my Bitcoin, I've closed out all my trades, but all the Bitcoin I have remaining, well, I guess I have a little bit in an ETF in my retirement account. It's a small position, but the majority of it is in cold storage. Now, if you hold cold storage Bitcoin, for you, there's going to be a soft fork upcoming of Bitcoin. It's going to be driven by something called the Bitcoin Improvement Proposal 110. I will be supporting this Bitcoin Improvement Proposal. It was renamed, by the way, from 444 to 110. I believe it was 444 to 110 recently. There's another proposal out there called the CAT that's floating around that basically proposes freezing a bunch of small, unspendable UTXOs that have a lot of spam transactions associated with them. And now there's a confiscation risk there, and I have to still really think through, do the game theory, thinking through the risk reward analysis of doing this part of it. But I do think, based on initially thinking about it, I do think it is probably worth actually doing something like this. But I have yet to really formally think about that. But the BIP-110, what it's going to do is it's going to temporarily, for 1 year at first, we can extend this, of course, if it works well, but for 1 year, the community is planning to freeze all of these large transactions, like op returns, inscriptions, things like that, at consensus layer. So the problem has been in mempool policy lately. The mempool policy, core version 30, opened up mempool policy, which allows large op returns to circulate freely around the network, and then it allows people to anonymously put whatever junk data, illegal data potentially in there that they want, and then a miner will eventually pick it up. This is the huge problem child. Is if nothing else, it's enabling more junk on the network, and it's really moving Bitcoin away from the monetary revolution ethos into a more altcoin, Ethereum, NFT kind of modern crypto ethos, which is not what we want. All right. So BIP-110 is planning to basically everything that Bitcoin Core V30 opened up in consensus is planning to lock that down, plus a lot of other exploits that came from SegWit and Taproot, locking all that down for a year so that all this junk and spam cannot be written onto the chain at consensus level. But this is going to create what's called a soft fork. It's going to be a contentious user-activated soft fork. So for all of you with coins on Bitcoin today, when this soft fork happens, what happens is all of what's called the UTXOs, the amount of Bitcoin you have in your wallet, you're going to have UTXOs on both chains now. So you'll have legacy BTC, and then you'll have the 110 chain, we'll call it, for lack of a better term, right? So you'll have the same. So if you have one Bitcoin, let's say you have one BTC today. After the soft fork, you'll still have one BTC, but you'll also have one 110 BTC, right? So you'll have one Bitcoin on either fork. Now, the big opportunity upcoming that I see is that there's going to be a ton of confusion around this process. And the whole thing is that the 110 fork is going to have the bad reputation associated with BSV and Bcash, BCH, I believe it is, right? So these are forks of Bitcoin that went the other way. They basically took Bitcoin from a small, efficient monetary network and blew them up into very large, bloated, spammy, big block networks. And they obviously failed in the market for various reasons. Now in this fork, the original Bitcoin, what everybody knows as Bitcoin today, assuming people continue to follow the current consensus rules, which allow these large op returns, allows SegWit and Taproot spam, that is actually going to become, in my opinion, the chain that ultimately loses and dies. But it's going to be called BTC for a long time. This is going to cause mass confusion in the network because 110 is actually the Bitcoin fork that's restoring Bitcoin to its monetary roots. And so that is what I believe will ultimately win. So you're going to have anybody who has, again, cold storage Bitcoin is going to have both. Anybody who has an ETF, anybody who has MicroStrategy, Strategy will actually have both forks as well through their custodians, but they don't have direct control over what they do with their UTXOs. The custodian does. So MicroStrategy and the ETFs all have to hope, the ETFs that store with Coinbase, all have to hope that Coinbase either holds both chains long enough for it to be abundantly clear, or they don't sell the wrong chain, right? So what's going to happen is a lot of individuals are probably going to immediately dump the 110 chain, thinking it's just another BSV or Bcash, BC, that's supposed to be an H, BCH, right? They're thinking it's going to be like this, so they're going to dump, maybe it's trading at $5,000 a coin when it first gets listed on the first exchange. So some smaller exchanges will probably list the soft forked 110 coin. Maybe they call it 110 coin. I don't know what they're going to call it. We could call it Bitcoin Knots coin. I don't really know, because it'll mostly be Bitcoin Knots nodes that enforce this at first. But let's say it's trading at 5K and BTC at this point, because of the pandemonium and the bear market's down to 30K. Okay, but there's still going to be a pretty big difference. Likely, a lot of users are going to come in here and sell the $5,000 110 chain, or get their $5,000 and maybe buy more Bitcoin or whatever they do with it. Those holding with the custodian have to hope that their custodians either hold both of them. In a case of like a Strategy, I do believe that Strategy will probably be able to tell the custodians what to do, and I'm guessing they'll hold both forks, and hopefully they'll hold it long enough to become apparently abundantly clear. The problem is that there's going to be a period of time, I do believe, in which many people will be led to assume that BTC is going to be fine and it's going to win, and 110 is just the thing that you should sell, and they're going to be wrong. And the reason they're going to be wrong is because, again, inevitably, when this chain starts to fill up, it's going to become decentralized. I mean, it's going to become very centralized very fast, and there's probably going to be a lot of illegal content slowly piling up on this. Whereas this chain, it will be a separate chain, and so I don't want to maybe overcomplicate it in this video. We're running long already, but there will be a period of time, likely, I don't know exactly how this is all going to play out, we'll take it day by day, but likely we'll have two chains. There will likely be a 110 listed at first on smaller exchanges and then eventually on larger exchanges, as some of the community gravitates to it, some of the community stays, but the community is going to be split across these two assets. That's going to be a big thing, right? And a lot of people are going to sell the wrong chain. So this is the opportunity. The opportunity, in my opinion, is to accumulate the new clean Bitcoin, the 110 chain. The first time in Bitcoin's history that the contentious user soft fork was the right fork to move to, and the original Bitcoin, led by now likely corrupt and outside influenced Bitcoin Core, is going to be the wrong chain to stick with. So this is going to cause a lot of confusion, but this is also the opportunity. I personally think that we're likely to see Bitcoin BTC prices around, at a bear market low. If I go back to my bear market, my charts here, I think I had a chart that showed about $30,000 Bitcoin as a standard 4-year cycle low. Where'd that go? I'm not going to find it right now, but I do think that we're likely to see $30,000 to $40,000 Bitcoin. When this really becomes an acute issue, the current Bitcoin that's at 85,705, whatever, 700 right now we'll call it, it might be still up at $60,000, $70,000 by the time this all hits, right? So the 110 proposal is supposed to go fully live, although some are running early versions of it, in February 1st. But whenever this all hits, there's going to be a period of time. So at some point, the 110 chain will be listed in smaller exchanges and likely being heavily sold, probably heavily discounted, and that's our opportunity to now purchase the winning Bitcoin, I believe, out of this next 6-year bear market at rock bottom prices and accumulate it probably for several years. Now, why do I say I think there's going to be a 6-year bear market? Well, if we go back to all these charts here, let me just take this out to the weekly. Let me go find a new fresh BTC chart. Alright, so we've had our multiple 4-year cycles that you are all familiar with. 2017, 2021, 2025 are the main ones that we need to worry about for now. Likely what I think is going to happen from a price action perspective, driven by all these dynamics I'm talking about. I think you're going to have this traditional bear market. Somewhere in here, the market's going to start to take notice of the multi-chain split. You'll see probably news about there's 2 Bitcoins. 2 Bitcoins. People are going to be freaking out on CNBC and everything else, right? 2 Bitcoins. So this one's going to put some fear into the market. I do believe that as that transition happens, our next bull market is supposed to be 2029. My guess is that, I don't know which chain it is, one of the 2 chains will have higher pricing by that point, but I guess both chains will likely rally from whatever their low is in 2028 when everybody starts to understand this. Let's say it's for main Bitcoin it's here, and for 110 it's down here. I do believe they'll rally from there, but you're going to have 2 probably competing assets rallying. So I don't think either of those assets are going to come anywhere near this $125,000 as they both compete. What I suspect will happen is that as the bull markets wear on, you'll have, this is BTC here, this is 110. My guess is that 110 will start much lower and actually end pretty close to, maybe even at parity with, let's say they both bounce to 60,000, maybe higher, maybe 75,000. Make it 75,000. Maybe we have 2 coins at 75,000 next bull market, and then the BTC chain has an extremely severe bear market because people start switching off of it aggressively, because all the news in this bull market being made about the illegal content on this chain, and the scams associated with this chain, all the NFT scams, everything else, whereas this chain, the 110 chain, will be clean. So maybe it makes a higher low. And then, once the market has fully digested this, in the next bull market, we can actually have a nice parabolic bull market for the 110, the clean chain, moving forward. This is the opportunity we have ahead of us. It's going to be confusing. It's going to be difficult to navigate, but I'm going to try my best to keep everybody who works with us informed so that we can stay on top of these developments. The last piece on this, so that's the, again, I think this bear market is going to be worse than last bear market, because last bear market, yes, FTX blew up, all these other major blow-ups, but that was not a problem core to Bitcoin. It wasn't an issue with Bitcoin itself. Currently, we have a major issue with Bitcoin itself, with the spam enablement that's gone on. So it's internal to Bitcoin. So I think that's going to cause way more panic selling than FTX collapsed. On top of the panic selling, I believe we're going to have forced selling, because if Bitcoin does drive to these low prices, with all this chain split confusion around how custodians are going to handle it, the strategies of the world are going to get absolutely decimated. Strategy is already pretty much down, but I'm talking single-digit decimated. Yeah, I'm fairly certain you'll see strategy trading in single digits. I do think they may still survive this whole the 6-year bear market, but I don't know that for certainty. They may straight go to zero. I don't honestly know, but it could be an opportunity if in about 5 years time it looks like they've actually navigated about as well as they could have. Buying $10 strategy will probably be a really good buy in a few years, but for now I think they're going to get absolutely decimated, and I believe they're going to become forced sellers of Bitcoin, them and multiple treasury companies. And it's not that they have to sell because of liquidation risk. Everybody keeps talking about that. That's not the point. The point is when the MNAV goes under 1. That means that when Strategy's market cap is under the actual value of their Bitcoin on their asset sheet, because the market is now discounting because of the risks associated with all this stuff, the market will put a discount on Strategy. If Strategy's trading at a 0.75 or 0.8 MNAV, means they only have 75% of the value of the stock, is only 75% of the Bitcoin they hold. Well, MicroStrategy shareholders are going to want something to be done about that, and they are going to demand that Strategy sell their Bitcoin, to service the preferred payments that they have for the preferred dividends, but also to support the share price. They're going to want them to start selling Bitcoin to help and buy back Strategy stock to help close that gap. Of course, that's a bad situation, because if they sell the Bitcoin's price is going down, so it's going to drive Strategy's price down. But nonetheless, that's what's going to happen. There are people who are going to be demanding that, very likely. But the bigger issue is, how do they handle the chain split, everything else that's coming up, all the confusion with that, with the fact that they don't actually own their Bitcoin. The custodians do. So hopefully that doesn't completely crush them. But that's what I personally think. So I think you're going to have forced selling by the treasuries. We're going to have a very, very rough situation because the problem this time with Bitcoin is within Bitcoin's protocol and network itself and not external like FTX. And thirdly, global liquidity. Back to all asset markets. I do want to tell you what I'm doing in my portfolios. I do manage. I am a funded trader. I do trade for other funds, not just my own money as well. So I'm going to tell you what I'm doing. I'm looking to short next year. I'm kind of laying off. I've had a really good 2025, great 2025. I'm trying not to be too active this last few weeks of the month because it can be quite volatile. I do expect a potential Santa rally, they call it, right? But I'm looking to build short positions on NASDAQ. I've already opened a small short position on NVIDIA because I do think the AI bubble is a massive bubble. I think LLMs specifically are way overhyped. I don't think that they're going to be able to get the returns necessary to service all the debt that the AI players are taking on. I think it's going to exacerbate the whole liquidity problem when lenders start being hesitant to lend for these mega AI projects. So I think NVIDIA is going to be at the forefront of the sell-off. I am fully convinced NVIDIA is quite like Cisco, which just made in the news. I heard people saying it made. I don't think it's made a new high yet, but it's just now made it back basically to the 2000 peak that it put in. I can see NVIDIA fall on this exact path. They are massively overvalued today. In 25 years, that valuation might be justified. But I do think they are massively overvalued today. So I'm pretty convinced that it's going to be a huge sell-off for NVIDIA. So I do have a small short position. I've started building short positions on NVIDIA. I've started building long TLT positions, although I was a little premature in building my TLT positions. I do think with a brief deflationary risk under the credit contraction, I do think we're going to get a big move in TLT as bond yields come down significantly. You see the 10-year chart. To me, this is a distribution, right? This is exhaustion. I do think this is a long-term downtrend. We had a counter-trend bounce. We have some consolidation here. Could break either way. If it breaks to the upside, there's a lot more problems in the system. I do think that this is ultimately going to break to the downside, but we'll see. So I've started building. I have mostly cash. As you see, I'm divesting into real estate. I'm holding mostly cash. But these are starter positions in TLT, starter positions in a NVIDIA short, and I am not net short Bitcoin. I will be soon, early next year, if we can get Ethereum to give us a good bounce into resistance. I'll be net short via Ethereum, and I think I have currently on my chart. I'm looking for 3,500. I almost put on a short position here on that. I've done some shorting on Ethereum. I've closed it though. I took profit on this big spike down, but I'm looking for a bounce back up too. I would like to see a confluence of the 50, the 200, and the 100 as they come together. As these come together, hopefully we get a confluence, and if this bounces back up in here, the 50 will curl up in here, get a nice confluence around this resistance level of 3,500. You see this wick low right here. I believe that this is going to be the level to look to build a short position on a move back up into here. So that will be what I'm looking to do myself and for my fund next year, starting early next year, looking to build these positions, these short positions. So this video ran way longer than I expected. I'll try to start making some shorter videos as time goes on, but thank you all for watching.